Hey, Trader Bear back with another video. And in this one, we'll be talking about the three types of market analysis. Now, as you may already know, the markets move up and down and occasionally sideways. But the question is if we want to make money trading, how do we know which direction the markets will be going next? Well, there are three types of market analysis that can help you with that. Fundamental analysis, technical analysis, and sentimental analysis. So let's start with the first one. Fundamental analysis. Fundamental analysis is a way of understanding the changes in the market valuation by analyzing economic, social, and political forces. In other words, just trading based off of news. One of my favorite ways to do this is a website called forexfactory.com. If you guys go to forexfactory.com and click the calendar option, here you will be able to see all of the news for the entire week, Monday to Friday, with the currency pair and what kind of news all throughout the week. So let's break this down a little bit. Let's look at Monday. As you guys can see here, it'll tell you the exact date, Monday, October 4th. It'll give you the times of days in which all these news events will occur, but more importantly, you guys can see here which currency will actually be affected by this specific news. Now, if you're going to be a fundamental trader, it is important to know how to read this in terms of the forecast, what this news has done to this currency previously, and then obviously after it already takes place, what actually happened. But I want to direct your attention over to these folders because these are actually very important. Ranging anywhere from yellow all the way to red, each color folder has a different meaning. Yellow, as you guys can see here, would be what's considered low impact news. This is news that isn't really going to affect the currency pair too much, and it also won't really affect the movement of the pair and how it is that you trade it. As you go down, you see the orange folder, which is a medium impact news, which is expected to affect the currency or economic standing of anywhere that uses that currency. But medium impact news is, well, it's right in between news that you don't really have to worry about and news that might take effect to the way that you trade. Now, last but not least, we have the red folders, and the red folders are high impact news. Now, this is very important whether you are a fundamental trader or not, because even if you aren't a fundamental trader, well, that's even more of a reason to understand high impact news. As we know, the markets tend to move in patterns, and if you are a technical trader, well, you can forget everything that you know when it comes to high impact news, because this is the news that will make your markets super unpredictable. See, we know that this folder or this news event is going to affect the currency pair, but the question is how will it affect it? So as we see here, for both of these red folders news, there's literally no previous data, no forecast, and nothing to really go off of. These are the type of folders that you want to stay away from in terms of trading. If we scroll down to 11:30 p.m., you guys see here, the Australian dollar has high impact news with, again, no real forecast as to what is going to happen. So I would know that around 11:30 p.m., well, I'm going to stay away from the Australian dollar. Any currency pair that pertains to the Australian dollar is a currency pair that I won't be trading for about an hour or two. Next up is my favorite, and that is technical analysis. Now, if you are a technical trader, you should know that the markets move in patterns, and these patterns tend to happen over and over and over again. Now, if you can get good at identifying and getting entries in these patterns before the patterns actually complete, well, that is where we tend to make our money as technical traders. So here's a popular pattern that most of you should know. Here, we are looking at a potential double top, also known as an M pattern. So in the M pattern formation, we are looking at the markets to come to a high point. Once they reach this high, the idea is that if the markets drop down and then come back up and touch the same exact high point, well, we now have two touches at that high, also known as a double top. Once we identify the double top, we wait for the markets to come back down, and at the neck of this M, we know that we can go ahead and enter the markets for a sell. So let's see how this played out. So there you have it. As you guys can see, we got our nice double top, also known as M pattern formation. This is an example of technical analysis. Let's draw it out. So we got the first sign of the market coming to its high point. As I mentioned, the goal is to then identify and see the market drop. And once it drops, we want it to come right back up to that same exact high. Upon coming to the high, the goal is to see the market get past this neckline. So although we had a few drops here, none of them passed the neck until we got to this point. We'll go ahead, we'll mark that off for the potential entry. And as you guys see, if you would have entered right here at the neckline, you would have had ample time to go ahead and make some money on this drop. And there goes your M formation. Last but not least, we have the sentimental analysis. And for this example, we're going to use the same exact chart that we just finished using for the M formation. See, sentimental analysis is based off of feeling. And the way that I look at it, it's more based off of what the majority of other traders and other people on the charts are actually doing to be able to move price into a specific direction. Now yes, trading based off of feeling is almost just as good as guessing, but there is a method to the madness. So zooming in on this setup in which we've already looked at, there's something that I noticed that maybe you may be able to notice as well. And what I see is, as I'm looking for this drop in the markets to go ahead and complete my M pattern, what I also see is a lot of wicks and pretty big wicks to the upside that pretty much tell me that although these candlesticks keep hitting this high point, there's not enough buyers momentum to keep them pushing high. So as you guys can see, long wick up, followed by a drop. Long wick up, followed by a drop. Long wick up, followed by a drop. Really long wick up, followed by a drop. Another long wick up, followed by a drop. And as you guys can see here, markets just continue to drop. Now this is something that I can look at with absolutely no markups on the screen and just see the constant pattern of long pushes that attempt to go to the upside, but there's just not enough buyers momentum. Thus giving me the feeling that, hey, even though these buyers are trying to push it up, well, it's just not gonna happen. We should be looking for sells. Now what's really cool is that if you trade binary options, most binary options brokers have what's called a market watch or a market sentiment meter. And obviously it's not to say that the meter is always correct, but if we look at the top right corner right now on pocket option, you guys see this meter right here? Well, this is a market sentiment meter. And if we read what it says the direction of all currently open trades placed by platform users. Therefore, this is a meter that is showing you the potential direction of the market based off of what everybody else in the market is doing. Right now, 75% of users are selling, bumped up to 97%. And as you guys can see, this green bullish candle is very quickly starting to push down, giving us this long wick on the top. Well, that's it for now, and if you enjoyed this video, make sure to hit the subscribe button, and also thumbs up and share this out with anyone that you think might benefit from this as well. Because here at Trader Bear, we're here to help. See you next time.